I thought I was doing everything right, and then I saw my tax bill. I just figured if I made as much as possible, I wouldn't have to worry about these kind of things. But now I'm trying to save for retirement and figure out what I'm doing with my life, and I just don't really know where I'm going.
Given that you make $600,000 a year, that's understandable, but I think I can help. Today, we are walking through a case study of Dr. Alex, who runs his own dentist business. Dr. Alex came to me completely overwhelmed with taxes and unsure how to scale financially so that he could retire comfortably with an early retirement within the next 5 to 10 years. My name is Grady Cool, CEO of Cool Wealth Management. I'm going to show you every bit of my process of how I help a client hit their financial goals and live the life they want to live. So first, tell me a little bit about yourself and your business.
Sure. My name's Dr. Alex. I'm 49 years old. I've got no kids right now, but there's a few nephews around that I'm pretty fond of. I primarily work with older folks at a retirement village. I'm running a practice with around 10 employees right now, but I'm looking to retire at 55, and it's only about 6 years away.
Perfect. So that gives me plenty of detail to work with. I'm going to be asking you a few clarifying questions to get a better idea of much more the personal side of finances. I find that it helps people with consistency a lot more when I have something that really fits well for them. So if you have any questions or anything just too personal, feel free to ask away.
All right. Sounds good to me.
So first thing is, tell me a little bit about what life was like growing up. What was money like?
Sure. I kind of came from the suburbs. I grew up in like a cul-de-sac area. I was pretty middle class. I didn't really want very much of anything, but I also didn't feel like I was very rich.
Middle class can mean different things to different folks, wide spectrum. So just so we're on the same page,
Yeah.
You got a couple of bedrooms, going to public school, eating public lunches, play maybe a sport after school. Sound about right?
Yeah, that sounds exactly right. I actually used to play a lot of football, and then as soon as I got to college, it was all books for me.
I had a couple of cousins that played college football, so very familiar with that world.
Oh, okay.
So tell me a little bit. Did people talk about investing growing up? Was it more hush-hush? Did people talk about money or...
No, not really. Investing at our house wasn't talked about out in the open, but it certainly wasn't taboo. I mean, I could ask my father what was going on, and I just didn't really tend to.
Okay. Makes a lot of sense. A lot of people, similar boat. So as far as your own adult life, any sort of strong emotions about certain types of assets? I mean, some common ones are things like real estate, debt, maybe crypto.
Real estate and debt are all fine, but crypto? I don't want any of that crap. I mean, I barely get it as it is.
I hear you. It is a different world out there these days.
Yeah, it definitely is. But I mean, as far as debt goes, I had a little bit when I was coming out of school and when I was paying off my own house. But I mean, it didn't really ever bother me much. I'm good on that note.
I'm glad to hear that you've been doing well with it. It's definitely something people can struggle with. But let's stick more on the personal side and stick more to you with things. So you mentioned that retirement was the main reason you came in?
Yeah, I mean, I want to retire soon and get done with all this. I mean, why make all the money if I can't be done earlier? But I just don't really feel like I have a plan or know what I'm doing. It's kind of scary.
That's understandable. And I'll have a much better idea once I've gotten to dug through the financials. Gives me a much bigger picture, especially with putting things together in the presentation. But any other smaller goals you're aiming at currently?
Yeah, honestly, if I'm going to sell the business and get value out of it, what I really want to make sure of is that, one, I get it for a decent price, and then secondly, that somebody's treating my patients well if I'm leaving them.
I'm definitely glad that you're the type of person that actually keeps that type of thing in mind. And I'll definitely be keeping that in mind with the plan, and the fact that we're starting so early definitely helps with that. So I'll go ahead and dig into things.
All right, I appreciate that.
From here, I need to take a look at all of the financial information that Dr. Alex has sent over so I can get a better idea of where he's at. For a quick summary, he has $1 million in his 401k. His home's worth $1.2 million. He has some gold and other commodities worth around $300k. He keeps around $50,000 in his bank account, and the rest of his net worth is tied up in the business, which we will touch on in a bit. Obviously, Dr. Alex has done fairly well for himself. But the next big question is, given his lifestyle and his financial goals, is he actually on track? He spends $300,000 a year. That amount of spending could make things tricky depending on what the value of the business is. I like to aim for age 100 with no sort of issues throughout retirement, given anything that happens with market crashes or health issues, so we'll need enough cash for 45 years adjusted for inflation. The value of the business can depend on a lot of variables, so I want to cover the basics first. That just leaves asset protection and insurance. Dr. Alex already has health, life, and disability insurance for him and his employees through the business. He has the basics of car and home insurance covered already, as well as the business's malpractice and umbrella liability policy. He has been making use of the beneficiary designation on his 401k, but otherwise has no other form of asset protection. That's definitely something that we'll want to take note of as we make the plan down the road. Now that we've covered the basics, now we can take a look at the business. The business brings in $600,000 per year. Dr. Alex is writing off the basic expenses of his business and the paying for insurance for his employees, but otherwise has tried really hard to keep really clean books. This has made it so he hasn't been making use of a lot of write-offs that otherwise he might be able to use. The business itself is set up as an LLC. Using a conservative exit multiple for his industry of 4x, that would make the business worth $2.4 million. While that definitely helps compared to his current portfolio, we aren't on track to actually make the entire early retirement work, as Dr. Alex will run out of money at age 93, assuming everything goes on average, but we want to be in there making sure that if anything happens, we're good to go. So we're going to want to be able to provide a little bit more direction to make things a little bit more secure. All right, let's get into it. At Cool Wealth Management, we do things just a little bit differently, as corny as that sounds. So first thing is ethics. I want you to fully understand how much you're paying, what you're paying for, and still feeling good about all of it. For me, that starts with holistic planning, meaning taking a look at the entire picture instead of just talking about stocks and bonds only. This takes into mind your estate plan, your business, insurance, being able to take the whole picture, including even things like real estate. Our whole job, we're going to make you rich and make things happen in your life. And as part of that, we want to make sure that everything is personalized directly to you. So that's where having everything personal touch comes in. Now we can get into the actual recommendation. The first part of any financial plan, beyond just the goals, is starting with an emergency fund. You've done a fairly good job of building up some cash reserves, but because you are a business owner, there tends to be more random large expenses that pop up. And because as we enter retirement, it's a lot harder to replenish that emergency fund without a big natural income coming in. So what I'm recommending is 6 months worth of cash on hand. For you in specific, you already have saved up some, so we'll have $50,000 in a bank account for you, whether that's in your personal or business account. Doesn't matter too much to me. The rest of it will be $100,000, which will split 50-50 between a money market fund and laddered treasury bills to get you a much higher interest rate while still making it so if you need the money, you can get the money.
Mm-hmm. Sounds good to me.
Now let's get into the business, since that'll play a large part in what we do with the rest of your portfolio. First thing, you have done a fantastic job of putting this all together. What we'd like to do from here is maximize your exit value and be able to minimize the amount of taxes you're paying year to year on this nice income that you've built up for yourself. First part of that is you're currently an LLC. We can change this up to an S Corp. Doesn't change the way you do business, but it does change how you file taxes with the government. You'll be paying yourself $150,000 as far as a salary, reasonable standard given the industry and how much you work. And then the rest will be distributions, which have much lower taxes because you don't have to pay self-employment taxes, Social Security, Medicaid. That way you're going to be able to save around $65,000 a year while still being able to max out your 401k. You're doing a great job with write-offs otherwise. Now, as far as the exit value of the business, using a fairly conservative multiple of 4, you can take your business and exit for about $2.4 million currently. If we're able to build up a little bit of income over the next few years, maybe we'd be able to get a little bit more. But the big thing as far as what you had mentioned is making sure we're selling to the right person while still getting a decent price. And a large part of what makes that possible is the fact that we're going to be taking our time on being able to find the right person. Because you are a dentist, if you are selling, you have 2 options. There's either selling to a private equity company, or you can sell directly to some other dentist. Private equity, you're probably going to end up with little less on the care side unless you find the right buyer. Otherwise, with another dentist, you might have to do some sort of seller finance situation, but you can be a little bit more picky about who you want to be serving your clients. So that'll be something we take into consideration, and we'll talk out a little bit further with the plan. Now, for the rest of your portfolio, what you've built up in terms of the house and other commodities or things like gold has honestly helped with diversification quite a bit. But throughout retirement, we're going to want still more diversification to help mitigate market timing. Things go down. If we need income and we have to sell some assets, being able to sell the right things or have higher income assets helps a lot. So where we'll find that is namely through bonds. We actually have a pretty interesting situation because you're selling the business for a fairly nice amount. It makes it so that we can be a little bit more aggressive right now with your portfolio, grow it a little bit more. And then as we're selling it, then we can get a little bit more conservative with some of the bonds. That being said, we don't want to be overly reliant on that, so we do have to take that into consideration a bit. For the time being, as far as what that looks like, your 401k that's 100% stock, we're going to transition down to 80% stock, 20% bonds. Then once the business is sold, we'll transition that to 60% stock, 40% bond, so that we keep pace with inflation. And then as you get older, we will slowly lower it 5% or so at a time until we've kind of flipped to the 40-60. And some of this we'll need to go through over the years as you get older, but namely, that's what we're doing for the time being.
As long as we have a straightforward plan, I feel good about it.
Personally, I believe there isn't much point in terms of stock picking in the day and age of AI, so we'll be sticking with ETFs at more of an asset class, passive level. Now, as far as your personal expenses go of $300,000 a year, we'll be keeping that the same and then maxing out your 401k. Because you have long-term employees, there isn't a lot we can do on the employer side of the 401k without just giving a lot more benefits to them, which then kind of defeats the purpose of putting more on your 401k. So any income beyond maxing out the employee side, we'll be putting into a standard taxable investment account, similar allocation of 80% stock, 20% bond for the time being. The last piece of the puzzle is asset protection, which you've done a fairly good job as far as the insurance side of things goes. But I do want to talk a little bit about kind of the more contractual side and where things go if you do happen to pass away one day. First thing is your house. Currently just under your name. If you were to ever get sued, they could also maybe take the business, some of your 401k. It's not a situation we want to end up in. So we'll move the house into an LLC. Then from there is your overall estate. We're going to start a living trust so that, again, if anything were to happen, all of the assets go straight to your nephews instead of being held up in probate court or going to the wrong person. Any sort of questions?
No, that all sounds great. How do we get started?
This was a condensed down version of what things are like, but it should give you an idea of what things are like with a real client. Sometimes there are more needs, sometimes there are less needs, but there always seems to be something we can do for people. If you want help with your particular situation, feel free to go on my website and book a call. Other than that, I will see you guys in the next one. Bye.